it's Will Chu, your financial engineer here. You know what day it is today? It's Tuesday, so let's roll that intro. Today's 2-minute Tuesday video is going to be about gross yield. So let's kick off that timer and get straight into it. There are 3 types of yields that property investors look at. The first one is gross yield, which we'll be covering today. Secondly is net yield, and thirdly is return on investment, or sometimes known as cash yield. Why is gross yield an important number to look at when looking for your investment property? Because you want to make sure when you're buying your investment property you understand the numbers and not base everything on your emotions. Now there's obviously sometimes you've got to trust your gut. So how is gross yield actually calculated? Well, there's only 2 types of numbers that you really look at, and that's why it's the easiest and quickest way to do an assessment on an investment property. The first one is the annual rent income. And how do you get that number? Well, if you're going from open home to open home, usually the property agent will have a property pack, and inside that pack would have a rental appraisal that states what is the annual rental income, or it will usually be given actually in weekly rent or weekly expected rent. You take that weekly rent times 52 in a year and it gives you an annualized rental income. Then the second number is you divide it by the purchase price. So by taking those 2 numbers you can work out the gross yield. So you take the annualized rent, let's say for example you're interested in this house and the property or the rental appraisal states that it's $750 per week, times that by 52, that gives you an annualized rent of $39,000. Divide that by the purchase price. Let's say that the maximum price that you're willing to buy or purchase this home, or not home, this investment property is $850,000. Times 100, that gives you a gross yield of 4.5%. So what does the gross yield actually really mean after calculating that example? Well, let's say that the mortgage rates at the moment as of November 1st, 2020 is 2.49% for 1 year. But let's just round it up for simplicity, 2.5%. You take the gross yield that you've just calculated, 4.5, minus the interest rate of 2.5% gives you a 2% cash flow. That is a good sign, but you also have to consider the other yield numbers as well. Like I said in the beginning of the video, there are 3 types of yields that property investors look at. One is gross yield, which I've just explained. The second is net yield, and that is basically considering or incorporating the expenses. And the third one is return on investment. Having those 3 numbers will give you a much more informed decision and become a better property investor before you make that purchase on that investment property. If you enjoyed my video, thumbs if you liked it, subs if you loved it, appreciate it. See you guys next time.